Welcome back to the Six Figure Capital 14-day course. Today is day 8, technical analysis, and today you will be learning the simplified techniques for analysing chart structures. Now in today's module, our game plan, we will be going over trading the trend line, followed by support and resistance, and finally price channels. So it's a technical module today. We will be further advancing your technical skill set. It's merely an introduction to how to analyze charts. Day 7, you learned how to analyze how the market moves. So it was all about understanding the structure of the market, how the markets move, the overall direction, so to speak. And you learned that they're either trending, ranging, or congested. An uptrending market consists of higher highs and higher lows. And a downtrending market consists of lower highs and lower lows. So this is very easy to establish. When you open up a trading chart, you'll of course get into the habit of just immediately identifying whether it's trending, ranging, or congested. In ranging markets, as you learned, they have no general sense of direction. They are simply trading sideways. Congested markets, this is a period where buyers and sellers struggle to gain control, and it trades within a zone for possibly days, weeks, or even months. Now onto our first topic for today, which is trading the trend line. Again, as mentioned, we are simply advancing your technical skill set. So this is your introduction on how to analyze chart structures and how the market actually moves. So yesterday, we learned the overall direction of the market and how to identify if it's trending, ranging, or congested. Now you're going to have additional tools on how to identify how price actually moves within those markets. So here we have an uptrending market situation. We have price from the low at the bottom left here. It moves up. We create an initial high in the market, followed by an initial low. Then we create a higher high and then a higher low. So again, I haven't detailed this, but you guys, you'll want to get into the habit of identifying this without me putting tags such as high, low, high, low. You want to be able to look at a chart and identify when it's uptrending. So we can see here, it's clearly in an uptrending situation. We have created an initial high, initial low, higher low, and then finally a higher high at the end. Now a trend line can be drawn across the highs or lows of these trending situations. So in this situation, we have a support trend line. Now I will explain support and resistance in great detail in the next topic, but we'll keep it simple for now. So for a trend line to be valid, it needs 2 points of contact. So remember that, 2 points of contact. You need to be able to connect one low with another low, or one high with another high. Now, I always like to see 3 points of contact for a good support or resistance trend line. So as we can see here, and I've indicated with a dotted line, we have 2 points of contact, the lows in the trend. So we have, of course, our initial low and then a higher low. Now, what this trend line does, it establishes an area where price could potentially reverse. So if we look at the far right, the top right corner, we have our higher high in the market. If we created another higher low, where could we expect that to be? Well, since we already have 2 points of contact on the trend line, the next higher low in the market, you could expect this to return to the trend line before continuing the move up. Now, in another situation, let's say we have a downtrending market. Price creates an initial low followed by the initial high. It then creates a lower low and a lower high, and then finally creates a further lower low. Now, in this situation, you connect the highs in the market. So this would be known as a resistance trend line. A lot of people refer to it just as a trend line. It can be, you can call it whatever you want. For me, it's a level of resistance or resistance trend line where price hits a certain point and it cannot increase any further. Same with the support trend line. It hits a point and it cannot decrease any further, which was the previous example. So this example, price is hitting a level of resistance, a point in which it cannot increase any further. Now, these are just invisible levels in the market. They're not brick walls. Price can break through these, and often when they do, these breakouts, so to speak, are extremely aggressive. And a lot of people use that as their trading strategy to make profit. Now, of course, this is just one piece of the puzzle for us. We are just simply analyzing how markets move right now. We will get onto the bulk of our trading strategy in later modules. I'm just trying to help you understand how to actually analyze the basic movements of the market. So we can see here, price creates the initial low, and then we have the first test of the trend line on the left-hand side. We then create a lower low in the market and then a lower high, and we can see the second point of contact was the lower high in the market. And if you look at the bottom right, we have another lower low in the market. So on the right-hand side, price decreases to create another low in the market. Now, if price increased to create a lower high, where could we expect that to go? Well, of course, we could use the trend line as an indication to, this is where the next lower high will be. It will meet the trend line before reversing and then continuing the downtrend. Now, this does not always happen. Let's say that price did return to the trend line, but in fact broke out. So this trend line did not hold and price increased and we started an uptrending situation. And this is actually quite common and happens a lot in various different markets. So what I'm going to do now is go over an example on the charts. So again, this is the basic example. I'm going to show you what it looks like on the trading charts. So what I'm going to do is jump over to Trading View and I'll see you guys over there. Alright, here we are on Trading View with Euro US dollar on the 4-hour chart. So first of all, I would like to go over a trend line and an uptrending situation where we're connecting the lows in the market, often known as a support trend line. Now, as you can see looking at this chart, price was ranging for a small period of time. This was typically around 3 months. We can see that it was uptrending before that. So it was uptrending, entered a period of congestion, you could say, or it started ranging, and then it continued the uptrend. Now, what we want to do, and if you've in day 6 favorited your tools, you can have this little toolbar here. We want to take the trend line tool, and we want to connect the lows in the market. So you could actually go from here or here. I'm going to take this area. So again, knowing where to plot these points on the chart all comes with experience. It will take time. You may draw in points. Let's say, for instance, at the lowest point in the trend, you may take it from here. But again, it's not valid, and I'll explain exactly why in just a second. When you're drawing in trend lines, and again, this relates to the candlesticks, and what I'll do is I'll zoom in on the chart so you can see this very clearly. You want to take it from the bottom of the wick, and again, the same applies for the other candlesticks that you're drawing this in for. You want to take it from the bottom of the wick. Now, if any of the wicks go below the trend line, as you can see here, we've got 1, 2, 3, 4. Both of those wicks meet the trend line. That's fine, it's valid. Now, the reason we wouldn't use the lowest point in this area for is because if we draw it in using this point, and let's say this is where we want it to be, you can see that multiple candlestick bodies close below the trend line. Now this would make it this would then make it invalid. It would be an invalid trend line. We can see we've got 1, 2, 3, 4, 5, 6, more than 10 candlesticks that close below the trend line. Therefore, it would be invalid in this situation. Now, there are other times where it would be valid if the candlestick closes below. I'm not trying to confuse you right now, but this would only be when there is something known as a false breakout, which I will explain later in today's module. But for now, just know that when you're plotting a trend line on a chart, you really want to take it from the lowest point. You want to take it from the bottom of the candlestick. You want to take it from the wick. So we can identify where this trend is returning to over time. So if I zoom back out in the charts here, and I'll just use the ellipse tool so you guys can see exactly what I'm looking at. So I've got ellipse tool. What did I say? Eclipse. So what we want to do is we want to plot the lows and highs in the market. So we've got the lowest point here. This is where the trend starts. We create our initial high, followed by initial low, which would be here. Again, this point is just slightly higher, but this is where the trend line seems to be intact. This is where price is reacting because, of course, this low is slightly higher, so it gives us a better angle for the trend line. And again, I'll just copy and paste this ellipse tool. We create a higher high in the market, followed by a higher low. Now we can see the higher low meets exactly on the trend line with this point here. So again, the ideal level, and we've got at least 5 points of contact on this line, and just in this general area. So we've got 1, 2, 3, 4, 5, 6 points of contact just from this general area where price created the low. And again, we've got a high here. I would probably consider this to be a high in the uptrend. A low, it's not a significant low, but it's a low nonetheless. And then we've got a higher high again, followed by, and again, this is a higher low. Although it is pretty close, it's still a higher low. And if I just draw in the horizontal line just to indicate that it is higher. So we can see here, this low is higher than the previous low. And this just continues. This continues until we either, the trend is exhausted and it can no longer keep continuing higher. Or what we will find happens is, and this is what you need to look at when you're looking at trend lines, you will see one of two things. You will see, and in this situation, I'll just give you an example. And what I'll do is I'll use something known as the ghost feed just to show you. So we're just pretending this is what happens with the candlesticks. We create a new high in the market and price starts moving lower. And what we'll see is price will return to our support trend line. So again, this acts as a level of support where it stops price from decreasing any further. Now, as mentioned, you're looking for one of two things. You're looking for a reversal. So this could be a key area where you're saying, right, this is the lowest point price will go. We're looking for reversal candlesticks, such as we've got like a small hammer here, possibly. We've got doji candlesticks in this area. We're looking for those kind of candlesticks, and price is going to reverse on the trend line, at the support trend line, and it will continue the move higher. So that's the first thing you would be looking for. And this all depends on how long the uptrend has been intact, the current situation of the market. The second thing you would be looking for is something known as a breakout. And what I'll do is I'll grab the ghost feed again. So you may be thinking price is going to reverse here and it will continue higher like this. But what may happen is we may experience something known as a breakout. So price could pull back from the trend line, but it could break what is known as this level of support, this support trend line. So this is in place to help us predict where price is going to go in the future. And you may be thinking this level of support is going to hold, so price doesn't decrease any further. But what you actually experience is something known as a breakout. And in this situation, we see that price breaks the previous low. So we've got the higher low here. And we also created a higher low in this area. So again, price broke this low and the previous low. Therefore, the trend is now changing. This could end up turning into a ranging market. It could even turn into a downtrend in the near future. So this is all things to be aware of when you're using trend lines. And again, trend lines can be used in a variety of situations. What I'm going to do is give you another example. So if I just clear this chart, and we'll go on to Great Britain Pound US Dollar. So again, grabbing my toolbar here, and it seems the ellipse tool has disappeared. So we'll add that back on. And I'm on the 4 hour chart. This is Great Britain pound US dollar on the 4 hour chart. And again, what we're looking for is just an area where the points connect, which would be right around here. And again, we want all those candlesticks to close above. We can see these ones here, they're almost closing below. So we just want a point where all of the candlesticks meet. It makes perfect sense. Now, if we analyze the market structure here, we can see it's definitely in an uptrending situation. Not the nicest uptrend I've ever seen. We've got a very extended move right here. We look prior to the uptrend, we can see that there was a small period of consolidation or congestion where price was just indecisive. So this is where the uptrend started. So what we have is our low here, or you could even say to the left of that, pretty much the exact same price level. So you would have your low here. But again, we want to draw in the trend line where it makes perfect sense. So at the right angle that makes sense. So having it here, it just wouldn't work. That just wouldn't work. You can see that price is definitely not reacting to this level. We want it to be a very nice angle in an uptrending situation. And again, I'll just take the ellipse tool. We've got the initial low, well, the initial high, sorry. We've got the low to the initial high. Then we've got our higher low, followed by a higher high. Now I'll just draw in a horizontal line to show you guys that it is definitely higher than the previous high. So you can see it's a higher price level. And we have our higher low. And again, if we played about with this trend line, it would meet up. You can see it's definitely reversing on this trend line. Then our higher high is our way up here. So we've got a very extended move up, which again happens quite often in the market, whether that be Forex, commodities, cryptocurrencies. It does happen frequently. And what we're looking for in this situation, and this is actually a really good example, price is now creating what is another low in the market. And you could say now that after the bulk of this move has happened and price is approaching the trend line, where would you expect it to hold? Where would you expect price to go? Well, right around here. You would expect price to return to what is known as the support trend line, right around this level here where all the points connect. So we have 1, 2, possibly this area as well. We'll just go with the direct contact. 3, 4, 5, 6 points of contact. And again, this would be the 7th. So as I mentioned before, the more times a level is tested, and more times a trend line is tested, the stronger it becomes. Now, the stronger it becomes, this also means that the stronger the breakout. Because of course, let's say you have a trend line, there's only 2 points of contact, and then price does this. Just straight down. You can agree that the breakout is not going to be as significant, whereas we have the current situation where we've got multiple tests across this support trend line level. It's holding really well, and let's say price drops down to here, it increases, and it's trading along this line, and what we experience is another move up and then a huge drop. You could agree that because there has been more tests of this support level, this level where it has been holding very nicely for months now, you can agree that the breakout is going to be more aggressive than a trend line that has only lasted maybe a week or a day or a couple of days. So again, the longer this trend line proves itself, where price holds above what we know as the support trend line level, the longer that price holds above this and the more tests that we have of this level, the stronger it becomes. But this also means when the breakout does happen, the more aggressive it will be. Now, what I want to do is give you an example of a resistance trend line, so a trend line on the opposite end of the scale. So we'll just go over that just now. Alright, we're now looking at a trend line in a downtrending situation, so also this could be known as a resistance trend line. This time we have gold US dollar on the 1 hour chart. So we can see here, definitely in a downtrending situation. Prior to that, it seemed that the market was possibly uptrending or ranging. So we had an uptrend, and then we had a trend reversal here, and we can see that the market is now starting to downtrend. So what we want to do is we want to take our trend line and draw it across the tops of the market, so the highs in this trend, and just connect the points where it makes sense. So again, you wouldn't use this area here because again, we've only got 2 points of contact. Sorry, 3 if we look at the far left here. So we've got 1, 2, 3 points of contact. And again, this is going off the top of the wicks. But as mentioned, as long as all the candlesticks close below, then you can draw in where it makes perfect sense, where all the points meet up, where we're experiencing multiple tests or reversals of this level. So we can see here when we use it at the lower point, so we lower the support trend, resistance trend line down, sorry, so it meets this area here. We've got 1, 2, 3, 4, 5, 6, 7, so more than double what we had previously. Now I'm going to grab the ellipse tool again and just show you we've got the starting point of our downtrend here. Then we have our initial low. You could even use this area here. This is a massive spike in price. So again, I would probably use this area here for the initial low, followed by initial high or lower high. Got a lower low. So again, in a downtrending situation, you are looking for lower highs, lower lows. So again, we've got a lower low down here, and we can see the lower high was actually at the trend line. So you can see this is a very good way to predict where price is going to go in the future. And we could expect from this either a breakout in price. So again, this would be when price meets the resistance trend line, where we expect price to increase no further. But as mentioned before, these are not brick walls, they're invisible levels. These are simply areas where the flow of buying and selling is changing. Just remember that. So whenever price meets the trend line, the flow of buying and selling may be changing, or it may amplify. So if the buying amplified, we would then see a breakout and we'd see a very aggressive move upwards. But if the flow of buying and selling changed, then of course we would see price maybe retest this level, and it would keep trading like this, and then we'd see another lower low in the market. So again, multiple tests across this level. We've got 7 plus, possibly, maybe more in the future. Now what I love about trend lines, they don't, and I know it's in the name, trend lines, for a lot of people think it's just for trending markets, but you can actually use them in ranging markets as well, and they apply to a various different amount of trading situations. You can actually use them for almost every part of the market. I've noticed one here whilst drawing up this chart. They act as key levels in the market where you can actually use them to trade, of course, what we know as bounce or breaks. So either price is going to bounce off this level or it's going to break. So again, bounced off this area here, and what I'm going to do is I'm just going to remove the trend line on this side of the market, just so you're not confused. Remove all these circles. So again, now we're looking at this part, and we can agree there's not really any general sense of direction in this area here. And I'll just highlight the areas you want to pay attention to. So again, we've got a test here. Although the wick dropped below the trend line, it's still valid. Of course, you want all the candlesticks to close above. So if I zoom right in here, and if you remember back to day 5, I've mentioned this multiple times already about the candlesticks closing above the trend line in order for it to be valid. This simply just means the body of the candlestick. So you want the body of the candlestick to close above the trend line. And again, the only time it would be valid is when we have something known as a false breakout. Again, I will go over this later in today's module, but I'm just trying to keep it step by step, simple as possible for now. So again, multiple tests across this area. So we can see that this is definitely a key level to watch in the market. Price returns to it over time. So again, we see that there was a very extended move in price away from the trend line. So just drawing the arrow here. You can see a very extended move away from the trend line. And what most people might have expected was price to continue in that direction. But again, we've seen price return to the trend line for what's known as a retest. So it retests the trend line. And again, it moves away, it comes back. It moves away, it comes back. And what we eventually see happen is we have something known as a breakout. Now, when you're trading a breakout, and again, this is only one part of our trading strategy. I don't trade trend lines on their own. That is not our trading strategy. But again, this will all make sense once you get to day 11 in the course. When you're trading a breakout of a trend line, for confirmation, what you're waiting for is a close below the trend line. So we can see here, price drops, it breaks. So this is what would be known as a breakout. We can see here, this is the point in which price breaks the trend line. So we've had it in this situation. And this is actually what I would call, this would be another type of a false breakout. So when price dropped below the trend line, many people would have sold in this situation, expecting price to continue lower because it's broke the trend line. But actually, in fact, the buyers regained control and price closed right up here. Actually, way up at the top, sorry. That's a bullish candlestick. So it closed way up here. So price opened here. It dropped below the trend line. So it would have been a lot of sellers in the market at that point. It looked extremely bearish. So you would have seen a lot of people selling, but in fact the buyers managed to regain control, and in this situation a lot of people would have lost money just simply because they didn't look for something we call confirmation. So the confirmation to help prevent mistakes like this, and it's not an idiot proof way to trade, it's just another simple method you can use to limit losses and obviously increase profits. So we look for something called confirmation. Whenever you have a break of a trend line, wait for the close below. So we can see here the candle closed, and at this point here, if I just draw in the circle, this candle opened, and you would have sold in this area here. You would have sold, and again, you would then need to determine where the bottom would be, so where you want to close your position. So whether that be here, or maybe it was a short-term trade, you closed it around about this level here. So you can see we've got the doji candlestick, so then this indicates that price is stalling out, potential reversal. So you would have closed any profit in that situation. Again, I just want to break down trend lines as much as possible. I could drag this out way more than I have, but I feel like you guys have now got the gist of that. And again, we've still got 2 more topics to go. So let's head into our next topic, which is support and resistance. Moving on to our second topic today. Now you guys will be asking, what is support and resistance? I've explained it briefly before when we were looking at day 7 at the different types of markets, and then trading the trend line in the previous topic, but I've never broken it down fully. And it is simply buying and selling pressure. Support, now we were talking about support trend lines. Support is where buyers appear to stop price declining. So of course the sellers are in control, they push price lower towards the support trend line, or the level of support, where buyers appear and they stop price declining. Therefore, we experience a reversal. So this is where we get our test of the trend line. Resistance is where sellers appear to stop price increasing. So like we were looking at with gold US dollar on the 1 hour chart, every time price increased, it hit a certain level where of course all the highs in the downtrend connected with the trend line, it stopped price increasing. So this resistance, this trend line, resistance trend line was in place, and whenever price increased to meet the trend line, sellers appeared, they stopped price increasing, and of course we experience what is known as a reversal. Now price will typically bounce between support and resistance levels. So again, we can have a single trend line, or we can have what's known as a support and resistance level, which I will show you in today's module. We'll go over a live market example as well. So price will typically bounce between support and resistance levels until a breakout occurs. And we of course, I explained a breakout, what that means, when we were looking at trading the trend line. And these levels are fundamental in the market. These support and resistance levels, they occur in all time frames, all markets. So this is fundamental to your trading success, so you understand the basic chart structures, how the market actually moves. So these basic tools that I'm providing you, the basic technical knowledge, can be applied to forex, stocks, cryptocurrencies, you name it, it can be applied to that market, commodities as well. They provide the basic understanding for advanced trading strategies. So before you go off and learn a very in-depth trading strategy, a very in-depth technical strategy, which I will teach you in the 14-day course and beyond, you must first understand the basic movements of the market, the basic fundamentals, such as support and resistance, trend lines, and of course, the different overall sentiment of the market. Is it trending, ranging, or is it congested? Now, here is a basic example of support and resistance, and this is typically what it looks like. So when price increases, it hits a level known as resistance. Now, this is a horizontal level. Now, as I showed you in the previous topic, we had a trend line, which is, of course, happens in a variety of market situations, but typically in a trending market. But again, this can be applied to a variety of market situations. You can have trend lines in ranging markets as well. But of course, a trend line, you're analyzing a point where price is, of course, a support trend line, you will have higher lows, or a resistance trend line where you will have lower highs. Now, a support and resistance scenario, you will have a horizontal level of resistance and a horizontal level of support, and price will typically bounce between these invisible levels in the market until we experience something known as a breakout, which I showed you with the support trend line or the resistance trend line. We'll experience something known as a breakout, and the more tests of these levels, such as resistance, if you have 2 tests of resistance and we experience a breakout, you can agree that the reaction is going to be pretty much minor. It's not going to be very aggressive at all. Whereas if we have 10 tests of resistance and then we experience a breakout, it will be extremely aggressive. It's a key level in the market, what's known as a key level. A key level is where price returns to over time. So let's say we have 2 tests of resistance or 2 tests of support. You can agree this is definitely not a key level in the market. It's just a minor occurrence, and you could agree that price will probably not return to this over time, but it's definitely a level to watch going forward. Whereas if we have a level in the market, a resistance level for example, where price returns to it over time, and we've had maybe 10, 15 tests of this level throughout trading history, you can agree this is a key level to watch in the market, especially for breakouts and reversals. So again, we experience something known as a breakout, and then you may encounter another level of resistance. So resistance is always on the top, support is always on the bottom. So as we said, resistance, this is where sellers appear in the market to stop price from increasing any higher. Now, whenever you experience a breakout and price returns to what was the resistance level, this actually turns into support, because again, support is always on the bottom, resistance is always on the top. So previous resistance turns into support. So again, we had our initial move up to create our resistance level, followed by a decrease to support, followed by an aggressive move, and we experienced a breakout. Price continued until it hit another level of resistance, and when price decreases, this now turns into a support level. Of course, a support level is where buyers appear to stop price decreasing any further. And these levels in the market, they appear, again, as mentioned, all time frames, all markets, they are absolutely fundamental. So you will find these in a variety of trading situations as well as trend lines. And again, we've got our next topic, which is price channels, and we can of course use them as well to help us understand the way that price moves. So again, we've got another test of resistance, and price will continually trade this way until it breaks out again, or it may break down. So we've got a different ways that the price can move. You don't always have a breakout to the upside. You also have a breakdown, which is known as. So you have a break up or a breakdown. Most people just refer to them as breakouts. So you could have a breakout to the downside, and price could actually return to the lower support. so the bottom support level. Now what I want to do now is give you live market examples. So again, let's just jump over to TradingView and we'll go over support and resistance. Alright, we're back on the charts. We have Great Britain pound US dollar, this time on the 4-hour chart. Now what we're looking at is key levels in the market where price is reacting, so a horizontal level. So again, I'll just bring this down for you guys. You want to select the horizontal line tool. So before we had the trend line tool, this time it's a horizontal line for the key levels of support and resistance. Now we need to pretend that certain areas of price has not happened yet. So let's just draw a line here. And let's just assume that this has not happened yet. We're focusing on this area on the left hand side. So price increased, it hit a level where, of course, the sellers regained control. So they stopped price increasing any further. So this is what would be known as a resistance level. So again, we want to take an area where it makes sense. So we don't want to use this point here because it's away from all of the price action. We want to bring it down. And again, this point here would make perfect sense. And I'll explain why just in a moment. So price decreases. We then create our support level. So again, we want to draw the support level where price is actually reacting. So where we're seeing a lot of stalling. So again, we wouldn't make it this area here because then we've only got one test. So again, it's not even a valid level because we really need 2 points of contact minimum for it to be a valid support or resistance level, just like the trend lines. And again, the more tests of these levels, the stronger they become. And again, the stronger they become, the more aggressive the breakout will be once it occurs. So again, we've got 1, 2, 3, 4, 5 tests of support here. Now, as I showed you in the example on the slides, we can have multiple areas of support and resistance. So you can have key levels within this bigger range here. So this is, of course, looks more like a ranging market, no general sense of direction. So we would also have this area here. And again, as long as the candlesticks close below the level, so again, they all close below. The wicks, they can be above. And again, this is what the resistance level would have been. And again, we're not paying attention to any of this. I'll actually bring this across. So we're just focusing on this side here for now. So we've got a nice resistance level at the top. Price decreases, creates support. And then within this larger area, this ranging market, this zone, we actually have another level of resistance, a minor level of resistance that's been created. So we've got multiple tests in this area, followed by a decrease. Price doesn't quite reach support. Another increase to retest resistance, and then again, a very aggressive move away. So sellers were back into the market, pushed price lower to support, support held. And if we just go across here, and I'll just extend this level over, we can see that the breakout wasn't very aggressive. And this is simply because we only had 2 areas in which price tested this level. Although we had multiple points of contact of this level, we only really had 2 key areas in which price tested it. So it's a minor resistance level. The breakout was underwhelming, and we can see here, and this is what I would call a false breakout. This area here, we can see a bullish move up away from the resistance level, and then a huge red candle. So we've got a bearish candle here, all selling volume, brings price back down below the breakout level. So we can see here resistance at this point, resistance turns support, support is then broken, and price is brought right back down. And at this point, many people would have bought after this breakout. They would have bought, and this just happens in the market. It's just one of those situations. People would have bought at this area, expecting price to increase, but actually what happened is price reversed, and they would have lost money in this situation, and then it done exactly as they expected. So at this point, after we see this extended move up, so we see this area here, and then move up to this high, this is the real breakout. Of course, this is the false breakout. Price returns back below the level. A lot of people would have lost money in this situation. And then we experience the real breakout, and price continues upwards towards the next level of resistance. Now, that didn't quite happen. What did happen is what we experienced a retest, what's known as a retest of support. So resistance, previous resistance, now is support, because of course this is the area in which buyers stop price from decreasing further. So if I just use the ellipse tool here, so we have one area, it's a wee bit too big. If I just copy and paste this smaller circle here. Second area, so again this is resistance. Now these areas here, this is when this level turns into support. So again we had resistance where it stops price from increasing any further. The sellers come back into the market and push price lower back down to support. But after you experience a breakout, like I went over in the example in the slides, previous resistance is now support. So again, this is the level where price holds above. Of course, the buyers are stopping price from decreasing any further. So again, this is a nice support level. And you can see going forward, this would actually prove to be a very reliable level. In the future, we've got 4 areas of contact with multiple points. So we've got 1, 2, 3, 4, 5, 6, 7, 8, over 10 points of contact. And again, we've got 4 separate areas. So again, the more points of contact we experience, the more areas of contact we experience on this key level in the market, the stronger it will become. Now you can see that price, of course, is now, I would say this is the midway point. So you can see here, between here and here, between the support level at the bottom, resistance here, and then support here to resistance at the top, it's halfway. So price used this as a level to reverse from, and then head towards resistance at the top here. So again, we can see there are minor structures within this larger zone, within this large zone here. So we've still got support at the bottom here and resistance at the top. And again, we've got 2 areas of contact, multiple tests of this top resistance level here. We've got another point of contact, so another area, a third area of contact with just one test. Price pulled back. And then what happened? We experienced a breakout to the upside in this point here. And what we're looking for, again, is a close above. So this is really up to you where you place your trend line. Let's say your trend line was here. Your resistance level, not your trend line. Your resistance level, it's totally up to you where it goes, as long as all the candlesticks close below the level. So again, the same as the trend lines or support and resistance, it needs to close inside. So if you're looking at support, the candlesticks need to close above the level. If you're looking at resistance, they need to close below the level. So again, these candlesticks here, if I just make this bigger for you so you guys can see this, these candlesticks both close below. So you can look at the bodies here in this area. They both close below, therefore it's a valid level. And when we're looking for a breakout, we're looking for a close above resistance. So if you're looking for a breakout when it breaks resistance, you're looking for a close above the level. If you're looking for a break of support, which is the bottom level, you're looking for a close below the level. Okay, so just write that down. A breakout of resistance is a close above. A breakout or a breakdown of support is a close below. And that is what confirms the move. So you're looking for confirmation, you're looking for a close above resistance in this situation, which obviously did occur. And this is where you would place your buy position. Again, this is not our trading strategy. This just helps us understand how price moves. Many people do use this as their trading strategy. It's very basic, a very basic way to trade, but I'm just trying to help you understand how the market moves so you can use this to your advantage when we go into later modules. So again, you'd be looking to buy in this situation. You would need to have predefined entry and exit levels. So where are you getting into the trade and where are you getting out? So you may have got out the trade right here. So again, this would all be predetermined before you enter the trade. Or it may be here. Or it may be a way up here. I highly doubt that. Many people couldn't predict where the move will end. But it's entirely your choice. I mean, it could have been here, or it could have been the high for Great Britain pound US dollar on the 4-hour chart. So again, this is all predetermined before you get into the trade. The whole point of today's module is to help you understand how the market moves. Now, one thing I did notice while we were drawing in the support and resistance levels, and what I'll do is I'll remove anything we don't need, just to keep this nice and clean. There was a trend line that formed within the support and resistance level as well. So again, this provides what we know as confluence. So further confirmation of the move up. So again, this all works in your favor. Confluence is a module we will go over in a later date, which is day 11. And it's basically the combination of several trading tools or strategies. They can provide further confirmation for taking a trade. If I just reduce this level here. So we can see we've got a very clearly defined support and resistance zone. We've got a smaller zone within that where price is trading. And this is where the trend line was first established. And we can see that price broke out of this resistance level. It broke up. We then experienced a retest, which is now support. A retest again. And then we can see we actually had a retest of the trend line. So there is 1, 2, 3, 4, 5 points of contact and 2 different areas. And in a third area, so we've got another point of contact here. And this would actually have confirmed the move up. So you could have actually bought at this area here, expecting price to break the resistance level. Of course, what we're experiencing is a squeeze in price, because of course we have resistance here, but we also have the very clearly defined support trend line in this situation. So there's not a lot of room for price to move. This is exactly what we're seeing. We're seeing something known as like a squeeze in price. So either way, you're going to see a breakout, either a breakdown of the trend line, where the trend line no longer holds, or a break up, where we'll lose resistance. So again, all of these can work in your favor. This is just a very basic example of how price can move within a ranging, trending, or even a congested market. What I want to do now is go over our third topic, which is price channels. Now for our third and final topic for today, price channels. Now, what are price channels? Well, they are simply 2 parallel trend lines acting as support and resistance. So again, today's module is simply all about support and resistance. And we have 3 main types of channels. We have an ascending channel, which is higher highs and higher lows. So again, these are found in uptrending markets. We have a descending channel, which is lower highs and lower lows, again found in a downtrending market, and then a horizontal channel, which again is found in a ranging market or congested market. So this is a sideways market. Now these frequently appear and can help predict future price movements. So again, you can use these areas where price is hitting support or hitting resistance and predict where it's going to go in the future. So here we have an ascending channel, and what I would like to do is show you a very basic example. We have an uptrending situation, and this is what it would typically look like in a live market example. Of course, price is never perfect. It doesn't just move like it does in our previous examples like day 7, like I showed you on the slides. It will typically look like this. Now, as I showed you before, I showed you that you can connect the lows in an uptrending market with the trend lines. So again, you will need 2 points of contact for it to be valid. I typically like to have 3. The more the better. That's the easiest way to put it. The more tests of that level, the better it will be, the stronger it will be. Now, although I showed you in an uptrending situation you can connect the lows in the market to predict where the next higher low would be, you can also do the same for the highs. And this is what's known as a channel. So again, they need to be parallel. You can't have them at different angles. They need to be as shown. And again, you have the support trend line and the resistance trend line. So the support trend line is where the buyers stop price decreasing any further. And the resistance trend line, of course, is the point in which sellers appear to stop price increasing. And eventually, in an ascending channel, you will experience what's known as a breakout. So I went over that in support and resistance, and also our first topic, trading the trend line. So eventually, in an ascending channel, what you're really looking for is a breakdown. When price breaks out, it breaks lower, and it obliterates the previous low. So we can see there I've highlighted the previous low in the market, and it has obviously passed that, and now the trend is changing. This may change into a downtrending market or even a ranging market. Now in our next example, we have a descending channel. So again, similar as before, the market is never perfect. This is typically what it will look like in a downtrending market, a downtrending situation. And again, we have the support trend line and the resistance trend line. Resistance is always on the top. Support is always on the bottom. Now we can see with the support trend line, we have 3 different areas of contact. With the resistance trend line, again, we have 3 areas of contact. So again, it's valid. We only need 2. Typically, I like to have 3 for a solid level. And again, with a descending channel, you will typically find price breaks up. So we have a break up, break out to the upside. And again, price will break the previous high, and the sentiment of the market has changed. It will may turn into an uptrending market, or it may even just start to range. The market just may go into congestion. But the main point I'm trying to make here is when you have an ascending channel, of course, the uptrend cannot last forever. It will break down eventually. So you will have what's known as a breakdown. Again, you can just refer to these as breakouts. And a descending channel, the market is obviously downtrending, and it can't downtrend forever. So you will have what's known as a break up. So again, you can refer to this as a breakout if you want. Breakout would be the general term for both. And finally, we have a horizontal channel. And again, this is typically, it looks pretty much the same as what I went over with Great Britain Pound US Dollar in our previous example for support and resistance. It's just a zone in which price bounces in between support and resistance. So this would be known as a horizontal channel. So again, it's just a support and resistance zone. And in this situation, price will break out at either point. We have the support on the bottom, resistance on the top. Now we will experience a break up or a breakdown. So there's no general sense of direction in this situation. Whereas the ascending channel, you're looking for a breakdown in price. With the descending channel, you're looking for a break up in price. Of course, the uptrend or downtrend won't last forever. So of course, you will see a reversal, or price will go into a period of congestion eventually. Whereas in a horizontal channel, you can experience a breakout of resistance or a breakout of support. So again, you need to use further confirmations to make sure you're on the right side of the market. Now what I'm going to do is going to give you a live market example again. This is our last topic for today. So let's firstly go over ascending channels. We're now looking at Australian dollar, Japanese yen on the daily chart. And of course, we're looking at an ascending channel. So first of all, I'll grab my trend line tool, and you just want to connect the highs, of course, where it makes sense. You wouldn't draw across this level here to connect these points because, of course, the first couple of candlesticks close above. And again, these candlesticks close above, and so do these. So again, you want to draw in at the highest point, but again, draw in where it makes sense, where we've got the most points of contact. So again, we wouldn't draw it down here because again, these candlesticks close above. So logical thinking, just draw in where it makes sense. And then in this situation, of course, we've got the resistance trend line in place. All we're doing now is putting in the support trend line. So again, this would be around about this area here. Now that's not exactly parallel. It would be around about this point, but again, still valid because all the candlesticks close above. And to make this easier for you guys, what you can actually do is if you open up the second second box down here. Now I don't have this favorited because it's not a tool that I use, but you can see here we've got a tool called parallel channel, and all you do is you click the first high in the move and then click the second. What I tend to do is I'll just click along the trend line where I want it to be and then just pull it down. And what I can do is I can move this across. I'll need to make this slightly larger. Again, you can alter this to where you want it to go. And we can see my trend line was just slightly off. And again, this will give you even levels for a channel. And if I just take away my trend lines, and what I'll do is I'll make this transparent for you guys so you can see exactly what I'm looking at. So you can see this will give you very accurate levels. So this is exactly how a channel should look like. And you can see nice uptrending structure. It's not the clearest uptrend, but you can see it's definitely uptrending. And what we're looking for in this situation, if I just extend the levels ever so slightly, we're looking for a breakdown in price. So of course the uptrend can't continue forever. And of course it's very rarely you'll see a break up when you've got an ascending channel. It does happen. I must make you aware of that. It does happen, but not very often. What you'll find is this resistance level, because it's at such a high angle, you'll find that these are good areas to sell. Of course, sell from resistance back down to support. And these areas here, once you've got a close below the support level, this is a good area to go short. So of course, to sell. I'm also seeing, just looking at this, I want to try this out. Got a key level, actually, a central point in this channel. So again, you can actually draw trend lines, support and resistance levels in inside different chart patterns. So again, we've got a parallel channel, we've got an ascending channel, and again, you can draw in a central level where price may return to over time. So we've got, of course, prices trading on support here. We experience another test, but then we've got a breakout. Price then returns to the lower support, which is the support of the ascending channel. And again, we've got multiple tests on this level. Again, we've got another breakout, the resistance here. So support turned resistance doesn't hold. And again, this is our central trend line. And then we've got multiple tests. The level proves itself, so it's a reliable level to focus on. So then we look at it in the future, we've got a breakout, and then price returns to this again. So you can see how frequent these appear in the market. They're literally everywhere. Every time frame, every market, you will find these types of setups. And these are very basic. And again, these are just for analyzing the way that price moves. And then we can find profitable opportunities within those. So what I want to do now is give you an example of a descending channel. So let's hop over to gold US dollar. Okay, we're now on gold US dollar on the 1 hour chart. We're looking at a descending channel. What I'm going to do is grab the parallel channel tool. So I'm just using this to keep it very simple for you guys. And again, we just want to connect the highs in the move and then connect the lows. So what we're actually looking at is more this area here. If we just get it right. And actually, if I bring up this trend line just a bit, so the candlesticks close below the level of resistance. Now, if we look at the bottom right hand corner, we can see that actually these candlesticks close below, and I will explain this later on in today's topic. So we can see here a descending channel. Of course, we're looking for a good level of descent, and then we've got an ascending channel, a nice level of ascent. Of course, the faster price is declining, the more aggressive the reversal is going to be. And we can see we've got multiple tests of resistance, multiple tests of support. So we've got 1, 2, 3, 4, 5 areas where it's tested resistance, and then we've got 1, 2, almost 3. So maybe just make this one the third, and then 4th test of support. Now, this is what I would call a false break, where price closes outside of the trend line, but reverses and goes in the opposite direction. And this is typically done to trick beginners, trick new traders. This is why a lot of people lose money, because they can't identify these simple changes in direction, these simple mistakes. Now, when we're trading a descending channel, we know we're looking for a break to the upside. I would never sell on a breakdown of a descending channel. So, of course, support. I would never do that. So, of course, this false break is because there's no momentum there. Of course, the breakout, there's no momentum. Therefore, price reverses just below and heads in the opposite direction. We can see we've got a very aggressive breakout of resistance. Of course, this descending channel, like I've mentioned before, downtrends, they won't last forever. And the more tests of this resistance or support, the more aggressive the breakout will be. So in a descending channel, you're really looking for a buying opportunity upon the break. So you're looking for a break of resistance. For an ascending channel, you're looking for a break of support. And it's funny I'm saying this because if we look back, we had just the exact opposite. So it's actually contradicting what I'm saying. And this is the reason I'm showing you. The reason I'm showing you this is to highlight that the market is never perfect. And if we just draw this in over here, and as I mentioned, you're looking for a breakdown with an ascending channel. So again, the level of ascent is not very good. You really want the ascending channel to be steeper than this, but again, it's still uptrending nonetheless within this small zone. We have got multiple tests of resistance, multiple tests of support. What you're looking for is a breakdown. You're looking to sell upon a breakout here. You're looking for price to continue from this level down to here, and then you're looking for price to go this way. But what happened is we had a break up. Now you can see this was short-lived. If I just extend these lines here, we can see that price actually, just for a moment, it broke out and then it returned back into this smaller channel. But then what actually happened was the trend changed entirely, and then we experienced our breakdown, and we started trading within a descending channel. So again, the market is never perfect. In an ascending channel, I wouldn't buy upon a breakout of resistance because again, this is typically short-lived and price will return inside the channel. In an ascending channel, you're looking for a breakdown, so a breakout of support. Whereas with a descending channel, you're looking for a breakout of resistance. So again, you would have made a very nice profit if you took this trade. We can see that price recovers from this false breakout and heads straight in the opposite direction. So again, a very nice profit on that trade. There is one thing we need to cover, which is horizontal channels. Now I feel like a live market example of that is not necessary. I don't like to drag out modules any longer than needed. I don't like to bore you guys basically. And a horizontal channel is simply the exact same as support and resistance. It's just a period or a zone in which price has been trading within for a sustained period of time. So again, this may be, again, not a very good example, but I'm just trying to make this very simple for you guys. It could be here and price bounces in between these support and resistance levels. So again, don't want to drag out this module too much. So again, a horizontal channel, if you refer back to the support and resistance topic for today, is literally the exact same as that. It's just a zone in which price is trading within support and resistance. Now let's head back to finish off the rest of day 8. Alright, now moving on to our rookie mistake for today, which is rookie mistake number 8. And this is making it fit. So analysing price through the use of trend lines or support and resistance, or even price channels, can be reliable, as you've seen. It can provide us key points in the market to focus on. But do not try to make it fit the market. I see this all the time when people draw in trend lines where it's not even relevant, where price isn't even reacting with the level that they're drawing it in. Or they draw in a price channel, but the levels are not parallel, but they try to make it fit. So you need to learn when it can be applied. And simply, if there is one thing to take away from today, only draw them in when price is providing a reaction. So the flow of buying and selling is changing at the levels where it's drawn. So if you're looking at a support level, you can see that price is pivoting on that level or it's reversing on that level. Therefore, you know it's providing a reaction. Analyze the flow of buying and selling throughout the market, and this applies to all aspects of the market. That's essentially what we were doing in day 7. You were analyzing whether it's a trending market, an uptrend or downtrend, a ranging or congested market. And again, that's what we've done today with the trend line, support and resistance, and price channels. So let's just wrap it up. It's been a very successful module. Again, we have advanced your technical skill set today, and you've now learned the basic methods of analyzing price structure: trend lines, support and resistance, and channels. This, in combination with your knowledge from day 7, will help predict the future movement of any asset. Again, this is just the basic fundamentals. There is more to come on this, but again, this will just help you get an idea or observe the way that price is moving, the way that an asset moves. And remember, the higher the time frame these formations appear, the stronger that level will be. And of course, the more tests of a support or resistance level, the stronger it will become. And when a breakout occurs, it's going to be extremely aggressive. Now, in the next module, which is day 8, technical analysis part 2. So again, we're still on day 8. Your next module will be part 2, which is triangles and pennants, followed by wedges and flags, and finally, price gaps. I'd like to thank you for joining me on day 8, and I'll see you on the next video.